Good day, ladies and gentlemen. A lot of people would have heard of the deal offered by Chocolate Finance. It is 4.5% per annum guaranteed return on your first 20,000 Singapore dollars and a target of 3.5% on any amount thereafter. Professor Ma will now analyze the deal. First, a bit of background. Chocolate Finance is not a bank, nor a money market fund. Instead, it is a managed account operated by Havenport Investments Private Limited, UEN 2010153115N, which is a licensed asset management company regulated by MAS in Singapore since 2010, serving private investors, sovereign wealth funds and global pension funds. Chocolate Finance's investors include Peak 15 Partners, previously known as Sequoia, Prosus, Credit Saison, GFC and Dara Holdings. Chocolate Finance is run by Walter Daoud, the former founder of Singlife. Your first 20,000 Singapore dollars investment with Chocolate Finance gives you a 4.5% per annum return. Note that Chocolate Finance will taking any upside as a fee. Similarly, if there are any underperformance, then they use their own shareholder funds to top up the difference, so you still get paid your 4.5% per annum. This means that the maximum return that investors get is 4.5% per annum, as Chocolate Finance gets to keep all the upside. When you park your money with Chocolate Finance, your funds get invested into a selected portfolio of short-term high-quality bonds determined by the portfolio managers at Chocolate Finance. At this moment, the portfolio is currently made up of Dimensional Global Short-Term Investment Grade Fixed Income Fund, SGD, UOBAM, United SGD, Fund and Fullerton SGD, Cash Fund. The first important point that Professor Ma wants to alert esteemed viewers is that each of these funds charges investors a management fee. Yes, before you even get any money, the fund managers will pocket a guaranteed fee. Guaranteed win for them, guaranteed to be paid by you, of course. Also, Chocolate Finance tells you that there is no way they can run away with your money, as the assets are with the three portfolio managers. Yes, this part is true, but again, Professor Ma would like to remind esteemed viewers that you can find the same three funds listed above on several brokerage or fund platforms like Endowus, Fund Supermart, Poems, etc., so you can simply invest with the funds yourself. There is no need to invest your funds through Chocolate Finance. So why is Chocolate Finance enticing you with the 4.5% per annum return? It is because the most difficult part of being a fund manager is raising funds. Professor Ma will repeat that. It is because the most difficult part of being a fund manager is raising funds. This is why Chocolate Finance has small print, which is, the offer to support fixed returns below 20,000 Singapore dollars lasts until the 30th of June 2024, or until the assets under management, AUM, reach 500 million Singapore dollars, whichever occurs earlier. Should the AUM be hit earlier than expected, Chocolate Finance may choose to extend it or amend it depending on market conditions at that time. Essentially, the 4.5% guaranteed per annum return only applies to the first 20,000 Singapore dollars you invest and only applies until the 30th of June 2024, which is 1 year at most for early investors. And most likely the three funds invested in by Chocolate Finance will have to provide back-end commissions to Chocolate Finance, which would help Chocolate Finance to support the fixed returns for the first year. Basically, Chocolate Finance is using the gimmick to raise funds up to its target of 500 million Singapore dollars, after which it will simply sit back and collect management fees. Imagine, if Chocolate Finance collects 2% as management fees per annum, Chocolate Finance will earn 10 million Singapore dollars per year. And the best part is, all the work is done by the portfolio managers, meaning Chocolate Finance just sits back and collects $10 million a year. So why is Chocolate Finance not as good a deal as people think? It is because investors can find the same three funds that Chocolate Finance invests in on several brokerage or fund platforms like Endowus, Fund Supermart, Poems, etc., so they can simply invest with the funds themselves without limiting their returns to only 4.5% per annum and without having to pay Chocolate Finance management fees in future. In subsequent videos, Professor Ma will explain more aspects of life. In the meantime, please help by liking and by subscribing. Thank you.